All right.
All right.
The audio is working, so that's a positive. So now I just got to share my chart, which is always a little bit of a challenge for me, but I think I got it this time. And we are going to start the war room here today. Give me a second. Bang. Window. Just make it we can see this. I think we're good. All right. Happy Friday, everybody. It is 2:15. Typically, we've been doing the war room on a Wednesday, but we had the Papa Powell presser. We had the Fed rate decision. We had the dot plot. And so we had to reschedule for today. So it's the Friday war room today. And if you have tickers you want me to look at, go ahead and post those down in the chat. But just kind of want to do a little overview of what's happening in the markets right now. And I talked about earlier this week that typically post Fed meeting, the days after that, you normally see a drop. It's nothing that's out of the ordinary. It's typical following the the Fed decision, because you have investors, you have traders parsing through the notes that came out of that. In this case, we got the rate forecast for 2026 and beyond. And then you also had Powell's comments in terms of what he said. So there's a lot of analysis that goes into that. And you also have repositioning that's happening, because we know that big tech has been carrying this market for most of 2025 after we had that weakness that came off of tariffs. And so, just some of the last few times that we had the Fed meeting and the Fed report, here's the October meeting, and you can see we were at all-time highs, and you can see the volatility that followed, right? Where it dropped down, retested the 50 simple moving average on the daily, popped back up, and then eventually came down and tested that 100. So volatility definitely came out of that meeting. And then if you go back to July, you could see big pop during the meeting, sold down, and then the next day dropped, and everybody was panicking. They were thinking, oh, this is a repeat of the August 2024 flash crash. That didn't hold, and eventually you started to push back up. So the volatility and downside pressure we're seeing today is normal. It's actually a good thing. But what is very clear is we have a strong resistance area from 69.19 here on the SPX. Really, if we just draw a line straight across here, we could see that this is the area that the bulls are going to have to break through in order to keep that rally running. But if you go look at the broader markets, if we come over to IWM, you could see that yesterday and today we made new all-time highs. Now, it could not hold it. It has since sold down. So you're seeing some profit taking come into play. The same thing with the DIA, the Dow Jones Industrial. New all-time high yesterday, strong candle, new all-time high today. You have profit taking. So this is actually a good thing. You're not just going to run straight up. So we are seeing some downside pressure here. The VIX did spike higher than where it is right now. You can see that it got up to 1786, but it has since flushed back down a little bit. It is still green. But on top of that, you have the US dollar that is still green, which when it's pushing higher, it does pressure stocks to the downside. And then we see that the 10-year is spiking again, because if we take a look at TLT and bonds, that people are selling bonds, which pushes that yield higher. And just looking at Bitcoin, this thing has decoupled from stocks. It's not pushing along with stocks. It's just kind of doing its own thing here. And it just has to make sure that it does not take out its most recent lows, because if it creates lower lows, then there could be more downside ahead to 77,000, 75,000 on Bitcoin. So definitely watching the supportive trend line to see what happens there. And then I'm going to take a look at the Qs. And then when we are going to get into the tickers that you guys requested, looks like Hanny Fanny 6650 wants us to look at NVTS, TTD, and ORCL, Oracle. So we will look at those. But just taking a look at the cues here, again, we're seeing rotation out of mega cap tech and into the Dow, into IWM. And you could see here, it has this gap to fill up to 629.99. It tried to do it. You had a bunch of upper wicks come in, and we are selling down more. We are down into the 50 right now. Let's just measure this out from all-time highs down to where we are today. It's about a total of a 4% drop. And from yesterday's candle, from the close to today's low, it's about 2.35%. So completely normal. Volatility can feel a little frightening when you first see it, but it's all part of a healthy market. But that does look like a pretty gnarly higher high, lower high double top. So let's see if big tech wants to come down a little bit more, which is obviously going to pressure stocks to the downside. But let's start by taking a look at NVTS. I haven't looked at this one in quite some time. Hop over here to the daily. And so Navitas had a nice push from October 9th into October 20th when they announced their partnership with NVIDIA. And since then, it just basically gave it all back. And you see a lot of high beta stocks, a lot of speculative stocks participated in that push. And really around that same time, October 15th to October 20th, you saw a big move lower. And right now you can see the point of control here on the visible range volume profile did serve as a consolidation point, and it bounced off of that. And it tried to make a run here on December 8th, but was rejected right off of that 50 simple moving average, came back down, and right now it's finding support off that 100. And in order for this thing to get moving, if we just take a look at our VRVP, we could still see that we have a larger volume node that runs up through 918. But if it can get above that, then it does have a pretty clear path. And then we'd have to watch this 50-day simple moving average around $10.20. And it would have to break that to start running again. So that's what we're looking at on NVTS. The trade desk, TTD, let's take a look at this one. So I've been accumulating shares, and I'll continue to do that. And I said when I started grabbing shares of this company that it is more than likely going to come lower. And in fact, even though it's at $36 now, it's going to come lower. And there is a very real chance it is going to come down and test the mid $20 range, upper $20 range, because this company just cannot catch a break. A lot of the pressure on the trade desk is a result of the competition from your walled garden advertising agencies like Amazon. And there's a belief out there that companies like the trade desk, who are open internet advertisers, can't compete in the space and that they're going to lose market share. So that's why you're seeing such pressure. And it's also a cyclical stock, meaning that there are certain times when it runs. It's not a runner all the time. And there has to be money out there for ad spend. So your major events like elections, presidential elections, midterm elections, Olympics, the Super Bowl, those types of things, if ad spend increases and the trade desk benefits from that, that can help them push higher. But just coming over here to the monthly chart, you could see that it's now lower than it was in June of 2020. So it's retesting prices from 2020. And basically what is happening here, it's a revaluation of this company because this was a growth stock darling. And you could see that it pushed higher. It's all-time highs up here, I think at 140, 141.27. And you could just see how far it's fallen. And that was December of last year. But just to measure out how far this has come down, it's just over 73%. And this recovery is not going to be fast. It's going to take time. The MACD monthly is red. There's no momentum. We're still not oversold on the monthly. So this one can come down. And you want to look at these support areas because it just blasted through this support here that was pretty long term. But the next price areas that I'm watching, 32.84, 31.27, and then 28.80. So again, this is one that you've got to be patient with and be willing to hold 6, 8, 12 months or even longer. And that's why I've slowly accumulated a small position over time and continue to add to it. But once this gets re-rated, once their cycle starts back up, if it can, then there is significant upside opportunity. But for now, it is heading lower for sure. Oracle. All right. Again, how the mighty have fallen. So Oracle, after that massive gapper here back on September 9th, this was their earnings where it jumped up $100. It's just gotten smoked. And it still has this gap to fill from its June earnings here of 179.41. And so it still hasn't done that. We're probably going to need to see some capitulation, big, massive red candle come down and push us through that. We haven't seen a huge spike in bearish volume that could signal that the move to the downside is over. But because of all the debt that Oracle has taken on for their AI efforts, that has a lot of investors nervous. And you have all this discussion about an AI bubble. Thanks to Michael Burry really pounding the drum on that, you're seeing companies like Oracle really take a beating. And a lot of it centers around this circular nature of money exchange, meaning that you have OpenAI, you have Oracle, you have NVIDIA, you have Meta, you have AMD, and basically their money is just changing hands. So the question is, are these real revenues, profits for companies, or are they just passing it back and forth, which is raising the questions about whether or not this is an AI bubble. So they got smoked on earnings again this week, and there's probably some more downside ahead here. This looks like it's going to close as an inside candle. You nearly have tweezer bottoms here. And we do see that buyers have stepped in at this price area before, right? So from November 25th, you had buyers step in here. And then if we look here, you can see with these lower wicks, buyers are coming in. So more than likely, there's a chance that we're going to get a bearish harami if this candle can close with inside of this candle body here, which could indicate more room to the downside. But Oracle is looking pretty sketchy right now. But remember, stocks go through patterns like this, cycles like this before they rebound. Really, the entire AI trade right now is getting pressured to the downside. It won't stay this way forever. It's just a cycle that it has to go through. Let's take a look at Tesla. So Tesla, so Tesla, you can see where the resistance is pretty clearly here. We have 3 times that it's tried to push up into this area. We had this high from October, 470.60. We had a recent high here, 474.29 on November 3rd. And then Tesla tried to get going today. We had a little bit of a ripper up to 463.22, but then you can see the sellers just stepped in here and decent bit of volume, but it is hanging above that point of control, the volume node, all of its moving averages. But again, it's extended. So this could go either way. You can make the argument that you have a triple top pattern here, that it just is making lower highs, right? It's not setting new area. It's not pushing. So this one could be coming lower, but the only thing that you have to the benefit here of Tesla is just all the supports here. But if it breaks down through this large volume node and the point of control and the 50, you'd want to watch that 100 as the next area of support. And then if it would go through that, the volume is very thin here, you'd be looking at 355.16 or possibly even the 200. But Tesla typically is strong in December. And it's Tesla, it can move significantly in one candle. So we'll just keep an eye on that. But in terms of me taking this to the upside, it's just too far extended, and I would wait for a better entry point. Taking a look at HIMS, ticker symbol HIMS. You got a death cross last weekend, and this thing looks like it is trying to build out lower highs here. So you can see that this low that we made on, what day was this? This was November 21st. And you can see this series of lower highs that we made. Boom, boom, boom. So if you are a HIMS bull, you don't want to see these higher lows get lost and taken out. If you take out those lows, more than likely you're going to see more weakness. But this is a significant drop down from where the price action was here on the 15th. Again, that window I was talking about, the 15th through the 20th of October, where high beta really just got crushed. But this thing dropped almost 50%. So if you were able to capture this move to the downside, really when it broke below these moving averages, where you waited for that retest off of the 200 and shorted here, you made some nice profit. But this thing bottomed out. The RSI was very oversold. The MACD started to flip, and it's getting a nice relief bounce right now, but still rejected off of this 20. So there's resistance here. So just watching this to see what happens with these higher lows, if they can sustain themselves, and if it gets a push up out of here and it continues to create that pattern. So something like this, push back up, higher low, push back up. But you can see it's got quite a bit for it to work through if it does start to push. If you are a bear on HIMS, again, you want to see these higher lows get taken out with force. You'll probably get a little bit of a retest. And then you want to see this price area here, 32.50 get taken out. And then there's a gap to fill, I believe, at 30.91 on HIMS. And then let's take a look at Marathon Digital Holdings right here. Again, this thing just got smashed. The crypto markets are just lagging. They're not doing much of anything. They can't hold on to their gains. But this one dropped 58% and hit a bottom here on the 21st of November, built out a supportive trend line, but we could see that we are below that today. So this is invalidated. So that's out. And right now we could see we're below all the moving averages on the daily. We're below the 10, we're below the 20. It tried to push above today, but got rejected. And if we close this way, we're going to have a spinning top candle, which indicates indecision. We'll see how this volume finishes, but it looks like there's probably a little bit more room to the downside here. If you're a bull, what you want to see is this come down and not take out this low. Just grab some liquidity, push up. You're going to watch this volume node in the POC. If it can get through that, and you can see there is a ton of space here if it can get into that thin volume gap, but you got to watch the 200, you've got to watch the 50, and you got to watch the 100. And the thing you don't want to see happen if you're a bull is this 50 is curling down to that 200. And if that crosses, that's a death cross. Then that just means this was a nice little retest and this thing is coming lower. But you want to pay attention to Bitcoin to see what it's doing, because that's going to have an impact on Mara. OPRA. Never heard of this one. Opera Limited sponsored ADR. I've never looked at this stock before. Let's just see what this all-time high was on this guy here. So all-time high in 2023, a little over $28. Let's come over here into the daily. Nice little rounding bottom pattern here. Did get above its at least its 10-day moving average, exponential moving average, and the 20 after that massive drop. Again, this is a high beta stock, but you could see clearly where the resistance is here. The 50-day simple moving average got rejected once it hit that at 1470, and few buyers are stepping in here today, but it's going to have to clear that in order to move. And then your next target on that will be 1635 if it could push up there. And in order for this one to really run, you could see very clearly what you're going to have to take out. That's going to be the 100 and the 200, the point of control, and this large volume node. And this one actually had a death cross back here on the 13th, but it actually pushed higher after that death cross, but that pattern is still holding. So watch this one. This could just be a retest before heading lower. You want to see how it interacts with that 50. If it can get above it and maybe consolidate a bit, that would be a good sign for the bulls. And then watch how it interacts with that 100 and that 200, and if it can push through. So what would be a potential target on OPRA? Yeah. So if you're going to take this one, so again, I think you would want to claim that 50 first because even though it's above the 10, it got rejected hard there. So I would be the ideal here. Look for it to get above that 50 and then come down and retest it, right? Because it's not just going to be a ripper straight up. Look for it to come down, retest, and then potentially you could take an entry there if that is a trade that you wanted to take. But in terms of risk to reward for me, I wouldn't touch it just because of uh, the resistance here on the VRVP and the fact that you have these moving averages. So it's better to let these moving averages come down, kind of fold over, let the price action consolidate down around here. Um, get a little retest and then consider an opportunity because there, as I call it, there's a lot of trash overhead that's in the way of this one getting a push. So and let's just take a look at what is going on here into the end of the day. Just checking back in on the SPX. You did have some buyers step in here. We'll see how we want to finish out the day. If we're going to, more than likely, we're going to finish red, but there have been stranger things that have happened where you get a big ripper V-shaped recovery. Again, everything that was said by the Fed and by Powell on Wednesday was bullish, that they're going to begin a stealth type of quantitative easing by buying back treasuries. So this is just normal, typical volatility that is to be expected following the meeting. But keep in mind, we are coming up to a point in December where there is usually a year-end rally, and this could just be people taking profits and getting ready to rotate into other beaten up areas. So it's going to be fun to see how this plays out. Any other questions before we wrap up here, or tickers that you guys would like me to look at? And I appreciate you guys being here. I want to say that too. Any other tickers? So in my former life, I was an educator, a teacher, and they say you got to give 3 seconds of wait time before you move on after answering a question. And in a virtual setting, it's a little bit longer. So that's why I'm giving that pause. But while I'm waiting, and if you guys don't have anything, that's fine too. We'll hop off. But just a reminder, I've been promoting this on the channel. I'm teaching a new class, the New Year Wealth Accelerator class, January 5th through the 8th, 8:30 p.m., completely free class. Something different that I've never done before, getting into investing and swing trading for beginners, for people who want to enter the world of stocks so that you can take control of your wealth, learn how to manage your money, something that I believe every adult in the U.S. needs to know how to do. And the coolest thing, I'm going to be giving away $1,000 to a lucky participant on the final night of the event. All you have to do is just click the registration link. It is actually in the description of today's live stream. So go ahead and do that and check that out. So I'm basically paying you for me to teach you, right? So yeah, sign up. All right, we got, let's see, Amazon. Let's take a look at Amazon. All right, so here is Amazon. Really, this one's been a laggard, Jason. So we're taking a look at this one. You could see that we've been range bound, right? And we did have that breakout moment that happened on earnings when this thing just gapped up. It sold down, but then it gapped up again the next day, but it couldn't really hold those gains. And so really, it's just been a little bit of a sideways mover. It is a laggard. However, the market eventually sweetens up on the laggards, like what happened with Apple earlier this year. And it more than likely, and Microsoft too. Microsoft was in the same boat for the longest time. It was just kind of pushed off by the wayside. And really, Amazon is a little bit in that laggard camp. Google was in it this summer as well, and you can see what happened with Google. Meta is in the doghouse right now. So it's just a matter of getting the money to rotate into this and looking at the options flow. There are quite a bit of calls that are coming into this one, but it's just going to be a waiting game here. But you can see that there is interest These wicks are nearly identical. I don't know if they're tweezer bottoms. I think this one might be slightly higher. That's very close. So the candle from the 9th and today's candle, if this holds and it doesn't flush lower, this tells us that there is some significance here to this price point. So we'll see if maybe this is an interim bottom and it wants to get going. But you can see overhead, the 100, the 50, the 10, and the point of control, large volume node. So, it's got a little bit to push through here, but it can come lower. But what we want to watch is when it would come back down and retest that 225.16 area. If it finds a bounce, which it should, because it did twice. If it takes that out, then you could see this one come down to 222.12. There's a little tiny unfilled gap there from November 21st. So definitely two areas you want to watch. Again, 225.07 to the downside. And then if it comes lower than that, see if it fills that gap at 222.20. And then from there, if it would proceed higher. But you could see if it does get above those moving averages, it's pretty thin volume. It can move pretty quickly. In an interim target to the upside would be 239, looking at the top of this upper wick, if it could push through there. But I expect Amazon to eventually get rolling. And then Justin says, what are your thoughts on the year-end rally? Yeah, I think the year-end rally is still intact. This is a great day in the market. I'm glad to see some selling, glad to see big tech cooling off, because that's good for rotation. The last 2 days, we've had money flowing into the Dow Jones and the IWM, and I'd like to see more of that. I'd like to see mega cap tech continue to sell down. I'd like to see Apple cool off more. I'd like to see Google sell down more, see Nvidia sell down more, and then that money flow into the remaining laggards that are in the Mag 10, but then also into the small caps, into your defensive stocks, and just really expand the breadth of this market. Because if the Mag 10 are going to continue to carry this bull run, that's not healthy and it's not sustainable. So you want to see the Qs come down. So that's actually a good thing. So this is a really, to me, a really good day. There's some opportunities here on some tickers that are on sell, and there's plenty of time before this day is over too. So you just gotta watch this move. But yeah, I think the year-end rally is still on. Next week we should see a real push happen. And if we don't, then you got to start calling into question, hey, are we going to get it? The Santa Claus rally really doesn't start until the final 5 days of the month, and it's the first 2 days of January. So it could be postponed a little bit. But everything just from a macro perspective is bullish. There's liquidity being pumped into the market, so there's no reason that we don't get a year-end rally. But you just have to pick your spots. And one thing in particular, just to show you this chart, you don't enter here. You don't chase at all-time highs. That is, if you want to lose money, do that. You've got to wait and be patient for an opportunity again, like Broadcom. I think Broadcom's a great company. I grabbed a couple shares here today on this one, but you got to wait for these pullbacks, and it's scary to buy. And you don't want to buy a huge volume on those moves, but let it come down, let things come down, get to the value area, and then you buy. The whole concept of buying low at supports and selling high very much applies. Very simple. But some of these tickers are just still so extended that you got to find where the value is, but the chart also has to show you that there's a path for it to move. Zoe says, hey, Jeremy, I have an Apple call expiring next week. Zoe, best of luck with that. I'll just look at the chart for you here. So I think Apple has a chance to get to 300, but again, with the Qs selling down like they are, if we continue to get rotation, you can see more weakness come in into a company like Apple. You know, it's holding on right now. It is, you could see the upper wicks here on this one. Did have a hammer candle come in, but it did close below the 10. But this one has been following a pattern, pushing up, pull back, pushing up, pulling back, pushing up, pulling back. And there's actually a trend line if I would draw it where it's been bouncing off of. So it's really got to hold up here and show strength to push back up. If your call's expiring next week, you don't have much time. You got that theta decay. It's gonna start accelerating and losing value. That's the challenge with options. But if it were to close down here below the 10 or below that 20, there's a chance it's going to come down to the 50. So best of luck with that trade, Zoe. I hope it works out for you. I hope Apple rips. And with that said, everybody, I appreciate you being here. Let's see how this market closes today. We're down 72 points here on the SPX. Will the bulls make a run, or are the bears going to lay claim to this Friday? Regardless of what happens, the market is fun. I appreciate you guys joining me, and let's see if we get a year-end rally. I think we will. But a little bit of volatility, a little bit of downside movement is always fun. All right, guys, I appreciate you, and I will see you next week for the Wednesday War Room and not the Friday War Room. Have a great one, everybody. See ya.